Hey guys, welcome to another one. Today it's Wednesday, June 10th, 2026, and the massive consumer price index inflation data just dropped this morning and completely reshuffled expectations. Meanwhile, the VIX short-term options curve is completely twisted ahead of next week's crucial FOMC meeting, and we're seeing some incredibly choppy, fragmented behavior across the board today. But frankly, this volatility is exactly what we should have expected based on macro data, structural technicals, and ever-oscillating political headline storm, which we saw play out today in real time, essentially. So quick disclaimer, this is not financial advice. This is for educational purposes only. This is exactly how I'm reading the market, managing my own portfolio, and thinking through trade architecture. So please hit subscribe to follow for more daily updates. I really appreciate everybody who subscribed this stuff. Making these videos takes a lot of time, and so every subscription really helps, and all the likes, and please leave comments. I get back to everybody. So let's start off with an index review because it was a pretty fragmented day, but eventually most everybody finished down. And in the indexes, everybody did finish down. So in the index review, let's go through QQQ to start with. They fell 2% today, taking back much of that recovery that we had yesterday. And so the recovery that we had in the middle of the day yesterday. Same thing goes for SPY. We were down negative 1.58%, also taking back a lot of yesterday's recovery move, which is we're shaking out a lot of people who FOMO'd into that recovery there. And so IWM also down, was not immune to the drop. It dropped negative 1.04%. The Dow also dropped today. It dropped 1.8%. And TLT didn't drop nearly as much, which is an interesting read, specifically if you think about all the things we were talking about this week. And so TLT was down 0.28%. And so the big takeaway here was that, despite this initial panic, key structural support levels actively held. I just said the percentages they fell, but if we look to where they fell, there are some structural support levels, even if it shook out a lot of late longs on some of these spots. And I actually want to show you these on the MES, for example, here. And I know we're in after hours. I'm trying not to worry about it too much, but because we're just looking at today's review, essentially. We can look forward to tomorrow. Or actually, I'm going to do a bit of forecasting, but we talk about pivot points a lot on this channel, and some people have been commenting about them, and I tried to show you yesterday how well they are respected. If you look at today on the MES, because we're doing our analysis of the indices here, we opened at the pivot point that we knew from the day before. I mean, it's forecast immediately at the close. And we fell and closed the day, at least in the futures, which is an hour after regular hours, trading hours close. We fell down to S1. And we knew today was going to have a very wide range because yesterday was volatile, even though we finished in the middle of the range, which is one of the craziest days to trade after because the pivot points move a lot. And I do a lot of my research based on those. So you can see it is respecting it, meaning that those structural levels are holding to some degree, even if it doesn't necessarily look like it. But if you look here, again, I have after hours turned on. This is on the SPY. We are back to yesterday's low. In fact, if you look at the QQQ, it outperformed it a little bit, which is interesting because we fell 2%, whereas SPY fell only 1.58%. But if you look at the QQQ, it didn't retreat all the way back to here because its fib that it's respecting is a bit higher in general. We talked about that Fibonacci retracement level yesterday. It was actually an extension that we're retracing to. Great, so that is the indices. Now let's jump into the sectors really quickly. And I'm gonna do it a little different today. I'm going to look at the heat map. And so when I wrote this today, we actually had more rotation into consumers, financials, and energy. And after the close of the day, financials didn't hold up as well, but I do a lot of the scripting for my videos during the course of the trading day so that I can do these like at breakneck speed for you guys. I like to talk quickly. Let me know. I'm probably gonna get off script a little bit when I do the forecasting, but essentially, aside from the staples, energy, financial names, and again, discount financials at this point, it was largely a down day across the board, as you can see. And if you look at this heat map, the real read for me is that institutions are aggressively paying attention to rising energy costs while systematically trimming bloated tech multiples. However, remember tomorrow that we're going to have more critical economic data. And so that data coupled with today's heavy rotation insinuates that the big money is bracing for a highly volatile regime shifting week. And I think we're actually already in the middle of that week. So, they're positioning for how this may play out for the rest of the week. And we're going to talk about the statistic that I mentioned yesterday. And I wouldn't be surprised if I start to see it playing out now as SPY is hugging this, QQQ is hugging this support level. Yeah, so let's jump into some individual names. I mean, we can look at this sector just a little bit quicker, But the staples that we talked about yesterday, some of those names were really flying. Campbell's, I took profit in my other account because we were talking about this trade. Conagra was up quite a bit. XLP in general was up quite a bit, 1.65%. So that part of the market is looking good. And those are the kind of names that I'm adding to over time. I'm not getting super excited by adding to Conagra just because it's floating right now. But these are the kind of things I've been adding on the way down because they pay a dividend. I like them. They've been out of favor. I've done some modeling on them in general. And you can see, actually, I'm down quite a bit. Although, mind you, this price may be down, but my cost basis isn't as bad just because I dollar cost averaged using cash secured puts. And we can talk about that. If you guys want to talk about that, leave a comment and I'll get into it. But back onto the sectors, XLP was doing great. XLF was doing better at some point, although we were down here, but it is holding a breakout support. It's a little bit of a retest from the last push that we had. So it's almost, it's within the realm of what we would have expected here. And so it's bullish enough to me that it didn't break down, given what happened in the rest of the market is another way to read that. Some of the other XLK, of course, considerably down, negative 2.29%, given the fact that technology fell and the QQQ fell. Although I am looking at this in the after hours, and these levels are holding very nicely. I'm not going to trade them live while we're talking, but some of my long-term positions are going to thank me for that. And so let's look at some of the biggest stock stories for the day today. And so Meta was one of those huge ones. I mean, look at this, and it's still continuing to flush in the after hours. So both Meta and Google are facing intense pressure after a highly anticipated trial update failed to provide the regulatory clearance the street wanted. And something I'll note, again, this full disclaimer, this is not financial advice. If this mirrors what happened to Google about a year and a half ago, and this isn't for everybody, of course, but when names have these types of regulatory issues, it tends to mark some type of buying opportunity. And again, it has to fit a longer term thesis. I am in Meta for the long term. You can see I have a ton of shares, 140 shares in this particular account. That is a lot of money put into the stock. I truly do believe in it, but it's a longer time horizon than just this one particular trade. Here we actually had across, I'm going to get into some of the moving averages. People have been asking me about some of that. And I usually don't cover that because there's other technicals that I use that a lot of channels don't use. And I thought those would be more compelling to people. But yeah, so Meta's a different story, but when we're talking about what happened today and the biggest movers of the day and the biggest stock stories, you can't not talk about Meta. It also happened to Google because they both had a similar, the same issue where a judge was turning down their request. And so the other big story in that space is Oracle. And so Oracle, they're down, at the time I started making this video, they were down 5% in the after hours. It looks like they're down quite a bit more and they were giving up some of that move. But the interesting part, not to get hark on pivot points again, look where we're coming right down into. I'm not entirely sure that will hold because it's in the after hours on earnings and sometimes you cut right through those, but it has proved to be a significant level, meaning I would have only been interested in getting in there. And if it breaks down below there, that means something else to me specifically. And so Oracle fell in the after hours because of their earnings. And we've been watching this, and it's going to become very important in a second when I show you some of our structured trades that we've been talking about this week, because Microsoft and ServiceNow are not moving in the same way, even though we were watching this to see what they could mean for that space. And so the street is aggressively punishing any software name that just shows even the slightest lag in the immediate AI monetization. And so Oracle is having that problem. If you guys want, let me know in the comments if you want me to do a breakdown of earnings. I haven't done that on this channel because I think there's a lot of channels that do that, and I'm trying to keep these snappy. But let me know if you'd like it, because I actually think that's really important to understanding your investments, not just the technical trading. And so the other big stock story is NVIDIA. And the reason I want to talk about NVIDIA is because it's the biggest stock in the world, and it fell 3.73% today. And it gave back, similarly, all of the recovery that it had yesterday, but it's also finding a base around here, which again doesn't necessarily mean it's bullish. I don't want you guys to read into that levels being held means it's immediately bullish. Sometimes you get these hockey sticks, or the H, as some people call it, and you could see it when you start to look at these on maybe the 1 hour be really compelling here, where you have this, the stick, a bounce, and we form an H here, and we're coming right down into the lows. Plus we closed the day on the lows, which means another thing. But I'll get into that in the market forecast. I just wanted to cover the biggest stocks today and a little bit of the news that moved them, but I tend to not cover all the news. However, let me know if you'd like me to. So now let's get into some of the trade ideas that we've been talking about on the channel and just check in on them, because people have been liking the Microsoft trade that I've been talking about. And Also asking me if that applies to IGV in general and some of the constituents, if ServiceNow is also part of that. And so what I'm going to show you is Microsoft, how it's holding up giving Oracle. And so I talked about this level a lot here. Anywhere from 400 to 395 is not necessarily a problem for my thesis of my Wyckoff Wyckoff analysis that we're in accumulation phase here. And what I would want to see to shake me out of this position is that we are essentially losing this, coming back down into spring levels with a lot of volume. And I didn't actually see that today. And as you can see, I'm down a lot in this position, but I am holding it for a long term. But a few options plays that I have on this are dependent on this analysis. So if this analysis falls apart, I will get out of this trade. Again, not financial advice. It's just how I'm architecting my trade. But I wanted to show you some of these levels on it, because what's interesting to me here, and it keeps giving me more and more conviction, is we're right back to the level we were at yesterday at the low. And so that's not a problem for me. Also, it was to be expected where we hit S1 here. And the great thing about it is we'd never even visited S2. So this is even more bullish to me than it had been. And also, I outperformed QQQ in general, which is really nice. And we've talked about the beta it has with QQQ in previous videos. So that is even more compelling because it outperformed it based on how it usually performs compared to it. It should have been down even more given that. Yet I think a lot of people would see this and say, oh no, we fell $6 today. This is a lot. But it hasn't changed the way that I'm thinking about it personally. So let's also talk, even though this is an ugly candle, but and it could continue to go lower. But sometimes these are the stop gaps that happen, the backstops that happen right before everybody thinks it's going lower and they pump up there. Because we're hitting accumulation here, hopefully, if my thesis plays out. And if you look at this on the daily, this is the point of control, meaning over the entire year, this is the level at which we've traded the most. So that's not necessarily a problem for me. And if we fall below it, I'm going to have to reassess it and see what it means based on different volume, but it may negate the Wyckoff analysis that I've done. And there's nothing wrong with being wrong about that. In fact, we do those analyses to see how we're doing. And maybe there's a different trade that's there. But at the present time, this trade actually still looks quite good for me. And we're catching up to some of our moving averages with that. And so the other question was, does this apply to IGV in general? And the thing to say about IGV is it's at a slightly different phase of it. This still looks constructive to me to some degree. But the other question, and I'm not playing individual sector ETFs or thematic ETFs at the moment. I'm actually choosing individual stocks. And so it's a bit of a different trade. But a person asked me if the Microsoft analysis, the Wyckoff analysis I did, plays into the ServiceNow setup. And I think that it does, but we can't judge them all equally. And one reason is if we look at them on the weekly, for example, well, first of all, they're fundamentally different companies and their fundamentals are different. But if we also look, ServiceNow is below its 200 weekly SMA. So that is a very different market than Microsoft is, whereas Microsoft is above. And previously, it did come down below its 200 simple moving average on the weekly, which the 200 simple moving average on the weekly is like an institutional buy zone. So it's usually not a bad spot to be buying blue chip stocks. Again, not financial advice, but that is one of the reasons I started looking at this trade. I had been in Microsoft throughout the years here and there. I took this trade. I also took this trade and got out. So, you win some, you lose some. Anybody on YouTube is telling you that they're just winning. That's not great. And it's not necessarily even winning or losing. It's whether my investment is appreciating or depreciating, and how my P&L is. But at this point, Microsoft is still hitting that, but it's fundamentally different than ServiceNow. However, that being said, ServiceNow is checking a lot of boxes for me on the daily. My Wyckoff assessment is largely similar. However, this, which would have been the spring, did not reclaim back into the range-bound trading zone here and came back down. So it's a different thing, and I would need to do a full analysis on it to see if I actually have conviction in this. I will say Wyckoffs are a lot more messy in practice than they look on prime examples of it. That doesn't mean that the behavior is still not there. In fact, sometimes these lower springs are even more powerful because it means more people got out after longer. And let's go ahead and look at how this is holding up in the after hours, because this is what I wanted to point out. ServiceNow is a little harder look in the after hours. There's lower liquidity. So sometimes you get these kind of weird candles that just revert immediately. But meaning if I put this on a smaller time frame, sometimes they look funnier. Like this candle is probably not that range. It's a liquidity the issue. The bid-ask spread is too wide. But let's look at Microsoft. Microsoft is holding up after the Oracle earnings. So that's not what we would have expected. Oracle has plummeted even more since we've been viewing this, whereas Microsoft is holding up at that same level. So that is a bullish indication to me, that divergence between those two names, especially because everybody's watching Oracle to see how it would inform names like Microsoft. Again, let me know if you want me to do an earnings recap on Oracle. I have to read through it, and I'm going to be reading through it tonight to see how it affects my position in Microsoft. So those are the only two positions I really wanted to talk about today. I mean, we can talk about some of the other things, like some of the water names that we had been watching, or Conagra, or Campbell's. I think I may have mentioned them briefly in the sector rotation assessment, but these have been doing really well. And again, these are things I buy on the way down. They're long-term holds kind of thing. These are not just I'm swing trading them because they move so much they don't. These are things that I'm buying for dividends, and the sector rotation looks really compelling. The technicals look really compelling. I'm actually liking this even more now. Conagra is a name that I'm still in, of course, but again, not financial advice. And let me know if you want to go through all the names that I'm in, because there's quite a few. It's ever rotating. And that's the other thing about watching things on YouTube. This isn't advice, but when you watch videos where they do assessments like this, realize unless you watch it the day that video was made, it may be different the next day. And people are not necessarily making videos to update you on that. In fact, I'm not updating you on everything that I'm doing too. For example, on Campbell's, I have a lot of shares here, but I had a bunch of options as well. And I am catalyst driven with options. And so a lot of times when you see a move like this, I immediately close one or more of the positions, the contracts that I have, because I'm capitalizing on that expansion of IV and the appreciation that Delta hits. So those are the structured check-ins, the trade idea check-ins based on the structures that we had identified before. And now let's check out the macro watch and the inflation watch. And I'm trying to keep this quick. It's already getting a little bit long. But essentially, let's talk about what's going to go on with the Fed policy under Warsh, because, of what happened today with CPI. So it's going to be incredibly difficult for Warsh, or really any Fed governor, to make a solid case for cutting rates anytime soon after today's numbers. But here's the one critical thing I don't really hear too many people talking about right now, which is that if you read through the numbers, it looks like the tariff inflation, and we still have it right up here. That's why this window is open. It looks like the tariff inflation is finally starting to fall out of the core numbers. And so that specific drop is going to be incredibly helpful in allowing him to lean dovish in his upcoming language. So I think there is a little in for him to sound more dovish. And essentially, if this sticky inflation is viewed as strictly transitory, meaning that once the tariffs pass through, the inflation due to tariffs passes through, it becomes a lot easier. And the base case is not a rate hike. It might just be a hold. That's not something I see a lot of people talking about. It's talking about more about the energy, which does have a lot to do with it, because essentially I heard today on Bloomberg, Mike McKay was talking, and he said, if there wasn't the war risk premium and tariffs, we basically wouldn't be having these inflation conversations. So essentially, if we continue to watch energy and then also think about tariffs passing through, or even checking out for headlines, because there hasn't been too many tariff headlines, we can start to get an idea that maybe rate hikes aren't given, and maybe we're going to start to hear some more dovish talk from the Fed. And so let me just briefly break down the CPI numbers, and let me know if you want more of this kind of stuff. I try not to report too much on not to bore you guys. You want to see some charts, I get it. But the headline annual CPI came in hot at 4.2%, driven heavily by a 3.9% surge in energy costs from the Strait of Hormuz. And so again, if that settles, and that's why we saw a lot of back and forth today, because Trump was talking about the conflict. And so essentially, if it was to be resolved, this CPI would be a totally different story. And I think people are trying to model that out, what it looks like. And so, core CPI actually cooled down to 0.2% month over month, beating expectations of 0.3%. And so that proves that core inflation is normalizing under the surface, while energy introduces wild geopolitical noise. And that's really hard to account for when you're trading, of course. And again, we have more vital macro data hitting the tape tomorrow. So tomorrow's producer price index, the wholesale inflation data alongside weekly jobless claims and a soft PPI. And so here's kind of my read on how that could affect the markets. A soft PPI print will completely validate today's core cooling and could trigger an aggressive relief rally, actually. And conversely, a hot PPI print will completely shatter the transitory narrative and send yields testing yearly highs. And so given that dual reality, we can't really forecast blindly. We have to trade the structural levels. And before I go on, just remember, a lot of times CPI followed by PPI, they do the opposite things. And today we saw, this this push lower. So my base case, at least from a statistics of how these economic events play out, is that we may have a little bit of upside, but that's TBT. I wouldn't trade just simply based on that statistic. It's just another data point, and to not be surprised if that happens. And so let's go into the market forecasting. People have been asking for that a bit, and I got to be frank with you guys. Again, it's going to be tough because of all the data that's coming in tomorrow, and also SpaceX IPO, and then FOMC next week. There's a lot going on that makes these kind of assessments difficult, and it's one of the reasons I think you're seeing the price action, because it's not just me or other YouTubers who can't figure this out. It's actually institutions who are positioning for this uncertainty. And so that's why you're seeing the volatility pick up. Of course, it's more volatile. People are trying to decide what to do and position accordingly. So the first thing to realize is that many major institutions had to scale into positions strictly based on fixed pullback percentages. So I think that's what we saw going on yesterday. And, so we saw it more in the QQQ. Where we hit this retracement. It was actually a fib extension on the daily, and we hit it almost to the T, and then got some support here. And there was also some pivot points that we hit and all of that stuff. But we were also falling off like about 9% from all-time highs. And when the SPY pulls back at about 5%, there's a lot of mechanical buying that happens. And so when it pulls back 5% from the all-time highs, historically, that's kind of a correction mark where passive funds and whales start scaling in. And so, that's a lot of what happened there yesterday, where people, they're not saying, I think we're going to go sky high from here. It's saying, well, we've pulled back. Now I'm going to start allocating about 5% capital to it. We've pulled back 5%. Maybe I'm going to put in X number of dollars into the index passively here. And then when it falls another 5%, I'm going to put it in some more. And so that's something you can look up. It's, a well-documented phenomenon. And it's also something a lot of traders, retail traders do as well, myself included. But if we look at another thing here, which is the fear and greed index, and this is also somewhat of another contrarian indicator, and a lot of people don't like it quite as much, but notice that we're at the low end of fear, almost to extreme fear, and we're only off 5%. But these were big, big moves, big dollar moves. So it is scary for sure. And people are leveraged after this big run. So you're getting a lot of fear coming in because of that. But we also have a lot of puts going on right now. And there's the kind of level that we see when the market is actually at, like a much bigger correction, not 5% off of all-time highs. So both of those things are contrarian indicators to me, and also mixed with that PPI data that I was talking about, and also some of the absorption that I saw. So I'm not sure if I mentioned it quite yet. But yesterday, in fact, let me go into the QQQ. We could see it on a few different time frames here. If I go into the 15-minute here, and I know I have after hours going here, we started to see yesterday here, of course, I'll look at all the volume here towards the end. And the same thing started happening again around 695. And I could see it on the tape during the day. If you were watching, there was a ton of absorption happening as we hit that. In fact, if we go down even smaller time frames, this is like an algorithmic trigger. We're below VWAP the whole day kind of thing. But there's a lot of wicks that are willing to come in here and buy it up. And sometimes they'd overpower, but they kept buying on the low end there. And if you actually create algorithmic trading programs, you may know a little bit about this. This may not be a trading, these wicks may not be people closing their shorts who have been aggressively, being sell programs. These may be people who are positioning for the long-term scaling in, essentially, institutional traders who don't want to buy all at once, or who have huge block orders on the dark pools. And so I do see a lot of that happening, even though you wouldn't see necessarily the wicks on the dark pool. You would start to see some of the volume show up over time, and you can actually see that on the time and sales on SPY, which I can go through how you can use that. But sometimes you could see some of these orders that are not reflected, and you can say, wow, I'm seeing absorption that's not showing up in the actual price movement at the moment. And so that's very interesting stuff to say, the least, but I did see a lot of accumulation happening, or at least absorption would be the way that I would phrase that. And so let's move to another part of the video that is still part of the forecast, but I don't normally do. So a lot of people have been asking me about my moving averages, because I do a lot of other technical indicators and watch a lot of other quantitative things, specifically those pivot points that I like so much. In fact, I don't know if we covered it. I probably, saying the same thing again. SPY or the ES respected them like to a T. And I expect that to somewhat happen to tomorrow. In fact, one of the craziest things, and we'll get to it after I talk about my moving averages, is about where the 200-day moving average is on the SPY. And so what I want to talk about is how I use my moving averages here, because a lot of YouTubers cover that, but they don't cover things like pivot points. So I thought that would be probably a little less compelling for me to talk about the same thing everybody else is. But on a high level, I use them on the daily. And I'm using the simple moving averages to help me figure out what regime I'm in, because my trading methodologies are different depending on what regime we're in. So previously, since April, we were above the 20, the 50, and the 200 simple moving averages. And when we're above that stack and the price is above that stack, I'm using different trading strategies. And I imagine a lot of other people are as well. When we lose the 20, I start to look at what's going on here. And of course, we got added volatility, because also a lot of institutions are watching this, and they have different mandates for when they're above and below different certain moving averages. And right now we're between the 20 and the 50. So that's a different regime for me, and I'm going to trade differently. My position sizing may be smaller. I might be doing a little bit more of, premium harvesting, that kind of things, selling puts, for example. This is a good time to do it. This was less of a good time to do it because you're so far extended that you're not getting great premiums, and you're likely to have a pullback. Now that we have that pullback, and I'm also looking at some of these levels for support, it's not a bad place to start doing some of those things. Again, not financial advice, just how I'm looking at the markets. But that's how I use my moving averages on a high level. And the one thing I want to show you, which not to scare anybody for tomorrow, but this line right here, this is the 200 simple moving average on the daily. And I also set it so that no matter what time frame I'm trading on, I got to zoom out here, and it's hard because I have a fib down here. Let me get rid of this fib. Let's remove this drawing. Now I only have one of these teal lines here. It's like this one, and it's a hashed line, meaning it's not curved or anything. It's just a level for the day. That is the 200 daily moving average that I have no matter what time frame I'm on. And the scariest part about it is you've heard me just talk about these pivot points. That is lining up perfectly with some of the pivot points for tomorrow. So if we were to fall all the way down to 685 on the SPY, I would not be surprised. I wouldn't be. However, I would be buyer. I would definitely be buyer. And when we, again, not financial advice, that's just what I would do, because that's a great place for me to scale in personally. And then the other thing to say is that when you look at it on the, it's 690 down here on the ES, it's not that's crazy of a level, and I didn't get rid of my fibs over here. It lines up very well with a bunch of other confluences. So I don't dislike that, and we're also starting to see some divergences. I saw this today on the 2-hour actually, and this is the last thing I'll do today on the forecast because I realize this is getting long. I started seeing this is on the 1 hour even. I'm starting to see 1 hour divergences on the RSI versus the price, and then I also saw it on the 2 hour. Where's my 2 hour here? Yes, price is higher here. RSI is higher here, but price is lower. So that's a divergence, and it's continuing to happen. I don't know if I saw it on the 4 hour yet. Yes, we saw it on the 4 hour. So this to me looks like we could get a bounce there just based on that. But again, I'm not telling anybody how to trade. I'm just giving you a forecast based on technicals, because I feel like a lot of people won't get into this, at least in real time. They're not going to show you how they assess it. They're just going to say that maybe they saw this. But if we look on the daily, of course not, right? It's too big of a time frame. But I know a lot of traders who trade the 4 hour divergences and make a great case for it. In fact, if you came in right here, you probably caught part of that. Those are harder to catch though. And if we're looking at it now, it's a little bit harder to tell. This is the 4 hour. So on the 2 hour, let's see if we still have these divergences. Who knows how this is going to play out? It'd be very interesting to see. If price goes lower and this goes higher, I doubt it. But anyway, that's the last parts that I wanted to do for the market forecast, because like I said, it's hard to manage, except I will say, if you can look at pivot points, we're getting a bounce off of that pivot point in after hours, although I don't trust it in after hours at all, unless you're actually trading on the futures. And I'm not listening to the Squawk Box right now, so I'm not entirely sure what news is or isn't moving it. So that's the forecast. Let's get into the last thing I want to talk about today, which is, well, actually, I think that would be it. Yeah, let's keep it tight. Sorry, guys. I was going to go into something else. Thanks so much, everybody, for liking and subscribing. I really, really appreciate it. So this was, Wednesday, June 10th market recap, but let me know if you want to see other things like some assessments of individual names, if you want to learn more about pivot points, if you want to learn about some of my option strategies, because this is good for just technical analysis of what happened during the day, but you might be interested in how I'm actually trading those things. So please like and subscribe, and I'll check you back here tomorrow. Be safe out there.